Hey, what up, y'all? It's your boy Degenerate coming at you September 9th, 2019. Today, I want to talk to y'all about inflation, pricing in regards to where you live, what a traditional account, like what are the pros and cons of like your IRA or your HSA versus what else can you do with that money? Can you make it work for you in a better situation? And we're gonna update my Litecoin USD trade. So first of all, I've been reading this book from Murray Rothbard. Shocker. If you've read him, you know, like everything I pitch is probably inspired by this guy. But he talks about how him and Ludwig von Mises were talking about how the price in one area is really affected by the people that live there, like their subjective views of living, like how we've decided that a carpenter should be compensated X amount, or that a bus driver should be compensated X amount, and how they get paid more in other areas versus where they're currently at. It's all subjective as fuck. It's where unions are great for the middle class, not great for CEOs or capitalism, but it really helps everyone get their fair share of a pie. But I'm not here to pitch unions, but just something to be aware of, you know, like if you live in rural Indiana, you're going to be compensated less because, you know, people in that area, they spend less money. They don't have access to as many, I don't want to say standards of living, but they just don't have all the temptations that would come along with living in a city. And if you have a crowded city, you have even more competition for satisfying your wants. You know, your baseball stadium can only still be so big. Your opera houses can only be so big. The more people that want to spend triple digits on meals, like if there's enough demand, more restaurants get to open. If more restaurants get to open, the more people get tips based off of that. They make more money. More of your population makes more money. They can spend it into the economy. So we shouldn't consider an area to be valuing our dollar less, but that's simply what it costs to get a product there and available for delivery to you. Because with a free market, if it could be provided more affordably, someone's going to do that. And if it's enough of a discount, everyone's going to switch. That business isn't going to get more money. If business doesn't get money, they go out of business. You know, you don't keep open a business that loses money repetitively. Unless it's like a dream project or a passion project, but those don't really exist in big businesses. So, larger rant. I'm just trying to narrow it down. Like when you go to the Grand Canyon, trying to get supplies there is harder. You may pay 17 goddamn dollars for a small plate of rice and something that you could get in your hometown for 10. But how much does it cost for it to be transported there? How much do the people there need to make? You know, that affects your prices. So if you want to save money, move to an area that provides you with your needs and that focuses on those. If you want to be a coder, living in San Francisco might be ideal for you. If you're working in the service industry, maybe don't live in San Francisco, because all those coders still need places to live and they can pay more than you, and you don't have those skills. You can't compete on that level. Maybe go live somewhere that has a good cost to, wage ratio for the service industry. Sorry. So anyway, moving past that, we're talking about inflation. Because in theory, like, you should be saving money where you live rather than going into debt. And if you're at a standstill or you're just evening off every month, you're never going to retire. So we're going to talk about having a surplus of cash and being able to save that. If you're watching this channel, you're probably in your early 30s, late 20s. I assume you're not 10. I assume you're not 50. So is investing in your IRA or your HSA or your 401k, is it a smart move? That's a question. And yeah, like, it's the pros of this here are that we've kept this traditional system for about a century. People are able to retire and you're able to make a return on your money. The cons, though, from my point of view right now, is that the money that you put in there, you can't touch it for 30 years. So do you believe that your traditional system is still going to be around in 30 years? There's the S&P 500 still going to be around in 30 years. If you believe that, then sure. I'm going to pull up a chart here. Gold has always been a currency, really. It's one of the first currencies. People have attached value to it for whatever fucking reason. Going back to talk about how people get paid more in areas with higher concentration of population, and that in general just raises your whole economy's prices. Gold is a great hedge. If your US dollar gets extremely inflated and it's not worth a lot, people still are required. People are still going to be there producing gold, right? It's not like gold is just going to disappear. We love gold. We've loved gold before the US dollar. We're going to love gold post US dollar. So if people require more US dollars to produce this gold, which they are if the US dollar is going to be weaker, if it currently costs this and we print more money, then we're going to start charging more for gold. When I say we, I mean like if wages go up, if general wages go up, then gold is going to be costing more to produce. So if people need more wages to survive, then your price of gold is going to have to go up. Since the 90s, it's about 5x to 4x in price. If you would have sold back there in 2011, a couple years after the last recession, you could have peaked. I'm not telling you to play the tops and bottoms. That's a whole game in itself. But when you look at gold all the way back down in the 70s, gold's like $100, and even in 71, 72, it's like $40, $50. You compared to now 17 or 1500, excuse me, that's a 70x if you just would have held on for the past 50 years. So I think it's a great way to preserve your purchasing power, if nothing else. Your pros, though, of your IRA and your HSA, for just putting money straight into that, and you can get exposure to things like gold through like a gold trust or something. You can definitely put your money into gold. The pros of those is that you get to save money on your taxes now. So if you're going to get a return on your taxes anyway, and you max out your IRA or you max out your HSA, depending on your tax bracket, you'll be saving, whether it's 12% or 20% on that $3,500 on an HSA, which is going to translate to $700 on a tax return. Or for $6,000 at 20%, you're saving $1,200. So you could be getting like $1,900 back on your tax return if you just invest in your future. And if you don't want to invest in current stocks because you don't believe in them, this is a solid option. Yeah, cool. Anyway, another question is, what else can that money give you for real? If you want to use it for trading, if you want to be a trader in your life, you could put this money in your IRA, your HSA, the very last day of the year if you wanted to. So you could use that extra $9,500 if you're a single person to trade with all year. And if you have a 3-to-1 risk reward ratio and you're gambling an extra $9,500, that is almost $285 for every trade that you win extra. That's an extra $95 that you lose for every trade you fuck up. If you practice the 3-to-1 risk reward ratio, that may be worth it to you, especially if you trade a few times a month. 4 months left in the year. That's I don't know, probably at least $1,200 that you could gain just by using it in your accounts currently. But anyway, I have this gold chart pulled up, so I'll talk about it. You were in this range, obviously, on the monthly that you came into in 2013. You broke out of it. You retested it back in July. And you saw some little stutter right here, but look how much volume came in such a tight ass range. That is fucking sick. That's really good for gold. Your bottom of your range was right here, though you really only touched it once. Hell, if you're looking back at slower months, you could bring it in to like 1100, 1150. But we've really ranged in this area. Now that you're trading above, you have another area of resistance, this $1,600 spot. And what else do you have resistance wise? That was at a 9. That doesn't have any significance there. So if I just draw a straight line, your next resistance is really $1,700, almost $1,800. I'm not saying to just all in gold, but if you're looking to long momentum, a monthly chart's pretty safe. So you could enter in, cut if it, stops below the previous month. But this is a 3-to-1, and this at least gets you to the top of the previous range back in 2011. If the economy goes south, this is really going to fly. There's not really a lot of data here. Most of the people have acquired it between 13 and 12, and the acquiring is done at this point. So, trade safe, but that's an option for you. Another thing I've been looking at is Litecoin USD. You can watch my previous video if you're curious about it. But on the previous chart you saw more volume coming in. That's pretty bullish. That's what I want to see happen with Litecoin. I think this is where we bounce right here. We have support right here and right around this area. And if this starts trading below this candle, the August monthly close, well, that's bearish continuation, and you expect the price to keep going down. Same thing what happened when when the 2 started trading above the 1. You have hella continuation, and in most cases, like a 2 starts trading above 1, you have hella continuation again. And if you're looking at a large enough time frame and you see it, you can always enter in from smaller time frames, but the monthly has more weight to it than a weekly. A weekly has more weight to it than a daily. When you look at the weekly, you came into this area, and that's where I was like, we're probably gonna bounce. If you look at the daily, we broke a trend line up here. We're not seeing a lot of volume coming in at the moment, but we didn't see a lot of volume coming in when Bitcoin broke its triangle at first. Did you notice how this line comes directly in line with some aggressive 13s? Anyway, I thought it was real interesting. It's just probably a coincidence, and because it's marked on a chart, I've noticed it. But we've been here, and we have some pretty, heavy resistance in this area. It was support for a while until it broke. We had it most of August. We had it back in May, and we definitely had it previous. Obviously, going back into the chart. But yeah, here's where we're at. If this too today, September 9th, starts trading above 72.25 and it closes above that, that's hella bullish. That's great. We'll probably start seeing more volume come in. And if it doesn't, oh well. I got into this trade at $65.11. And my first take profit is 78. Let's see. Where is my other take profits? T2 is 87, T3 is 100, T4 is 115, T5 is 140. And those later cuts, it's more just something that I expect a pyramid. And the more this trade starts popping off, if you can pyramid a trade, you make a lot more profit. By that, I mean you enter in a second trade and you bring your stop loss closer. So if you were already in this trade and you were going to make another trade, you could enter in right there. You could cut below the previous day at 67.20, and then you could have a 3-to-1 ratio at $79. And now, instead of an eighth of your account in this trade, you could have 20% plus your eighth of your account. Like 30 something percent of your account in this single trade. But you're still only taking on 2% of risk. Or if you raise your previous stop up from 61, you can even have less risk. For instance, if your gets invalidated at 67.20, you now lose less than 1% if it trashes 67.20. Anyway, it's just some dreams of mine, some goals. I hope that we trade safe, and I'll leave you with looking at the monthly or the daily chart of Bitcoin. Backed futures are going to launch in like 2 weeks. We've been trading in this range pretty less and less volume as we continue in this triangle, and we'll probably continue to see less and less volume until it breaks out below this 9.4, or until it breaks out of this. And I mean, today's the day. So if you want to place some bets a little bit early, you could either one, bring it down here past the previous lows of this whole triangle, or you could bring it past the lows of just today. Or if you look at the weekly, you could bring it past the lows of there. It all depends on what time frame you're trying to play and what your game plan is. But I hope this gave you some inspiration. And I'm going to be going to Michigan for work the next couple days, so I'm not going to be around. I hope y'all trade safe while I'm gone, and I hope you always manage your risk and that you can fulfill your dreams. If you have any questions, comments, you need any advice, maybe reach out to me. I can give you my opinion. I can share with you my experience. That's all anyone can ever do. But I'll try to communicate what I think as honestly as possible. If there's anything that I can elaborate on or do research on to help you, just, comment below. I love to make the time to assist. And, yeah, I love y'all. Recognize, I try to recognize the privilege of being where I'm at today. And I hope you do as well.